Hello, everyone. This is me. My name is Martin, and I'm the author of ABC Free Forex Signals. Guys, if you want to receive my free signals, there's absolutely nothing to buy, guys. There's no credit card required. You can stay with me as long as you want. You can discontinue at any time. And there's no, like I said, there's absolutely no obligations. I'm helping students from all over the world, and I want to help you if you're a new subscriber to this YouTube channel. Now, I just want to let you know I'm a proud Canadian trader. You can see the red maple leaf here, and this is my email. So if you want to receive the free signals right into your inbox, then please email me at mskyj007@gmail.com, okay? And that's the only way I send out the signals. I need your email so I can send them out to you, and I'll put you on my VIP list. So a little bit more on this later, okay? So before we start looking at this week's trading results, and again, there's a bit of a surprise here. I want you to take a look, guys. This is my humble disclaimer. My free signal service is an educational program only. I want you to understand that. I'm trying to teach you how to trade correctly and not give you any specific investment advice. And I do this by sending out my free signals. It's your responsibility to evaluate the relevance of my advice and content, guys. And you can keep reading this. Only risk a maximum 1% of your account balance, 2% if you have a lot of money in your account. And for new traders, please trade on a demo account only for at least the next 3 months. Okay, so let's get started. And this video is called Having the Right Trading Journal. Okay, so this is something I haven't discussed in the past, but I'm going to let you in on some secrets and exactly what I do. Okay, and this week wasn't the best winning week, but it was still a winning week, meaning that we made more pips than we lost. But let's put this all in its proper perspective. Regardless of your wins and losses, regardless in how your trading week goes, you need to do one more important thing if you want to succeed as a Forex trader. This is it. You need to acknowledge the details of your trading experience in a journal and write down the important lessons you learn each and every week. Now, I'm not a big fan in keeping statistics and lots of numbers of my wins and losses on a spreadsheet that you have to custom make. This is what the other online gurus want you to do. Well, not me. I want you to keep a different type of journal, one that's easy to do. Let's take a look at this video and find out the lessons you learn. Find out what stuff really matters to your trading success and how to keep track of it so it actually forces you to make changes and reinforces your winning habits. Let's get started. Okay, last week, we're going to review all the trades from last week, and I'm talking about from November 1 to 5. You can see that right there. So the previous week, but I'm not talking about last week, but the week before that, we had two trades held over from October 27th and October 28th, and they were huge, big wins, guys. The very first one from October 27th was a sell British pound CAD. It was a big winner for approximately 76 pips, okay? And it hit our first take profit, and then it was stopped out after that, after we moved our stop loss. Now, on October 28th, I sent you an email telling you to buy the Swiss franc Japanese yen. It also was a big winner with approximately 70 pips, and this one hit our second take profit level, and then after we moved our stop loss to get ourselves into a free trade position, it was stopped out, but we did make 70 pips. Now, this recent week, I'm talking about the week from November 1 to 5th, November 1st, I sent you an email, sell the British pound USD. This was a winner for approximately 50 pips, 53 pips, and it hit our first take profit target. And then later we were stopped out again because we moved. After we do hit our first take profit, and I'm going to show you this in the coming trades, like the charts of these trades here, we're stopped out. But when we're stopped out, we don't lose any money. In fact, we actually make some extra money, and I'll discuss that in a bit. Okay, so November the 2nd, I sent out another email, and I'm going to sell the Euro USD. This was a loss, and guys, I have to admit something. I made a mistake on this trade, and again, when we look at the charts, I'll tell you what that was. It was approximately 33 pips, so we did minimize the loss here, and I did send out an email, a special email, to close this trade when we were in a loss position, but the next day it completely reversed again, went in our favor, and if we would have stayed in the trade, we would have had a pretty good win. So I'll explain that as we look at the chart. Now, next, and the final trade of last week, November the 3rd, I sent out an email: buy the Euro Japanese Yen. This was a loss of 99 pips, so it was it was the biggest loss of this past week, and this was totally beyond our control or any trader's control. And again, we'll look at the chart, see what happened. We closed the trade because it's part of our money management system. When price closes past the DTL line, that's the dominant trend line, we close the trade automatically to minimize our loss. Okay, so this recent week, and we talked about this week right here with these trades. Okay, this recent week, there was a total pips we won. We still won 67 pips. We had actually made, with these first three winners, 199 pips, but with these two losses, we ended up still with 67 pips. Not bad, guys. It was still a winning week. Overall, from the start of October, we're now up 435 pips. So doing pretty good, guys. And that's what happens when you follow the process and follow my trade signals, okay? Okay, guys, here's the first trade held over from the previous week to this last week, and it's from October the 27th. This is in the email I send you guys, so you get all this information. Here it is: new signal, sell the British pound CAD. Then here's the sell entry at this level. So the level was 1.6972. Here's the first take profit level right here. Second take profit level, guys. And this is where we got in. Okay, so let's recap the trade real quickly. Our entry, as I sent to you, was 1.6972. And you entered at the close of this bearish candle, guys, or the open of the next session. All of our candles, these are daily candles. They close at 5 p.m. Eastern Standard Time. So there's no worries, no stress. You just wait for a candle to close. And we basically look at our computer once or a couple of times a day, no more than that. Okay, just to kind of monitor how we're doing. So anyways, we got in right here, guys. The next day, right here, you can see price went back against us, and so we're in a losing position. And again, take a look here. The moving average lines, they are spreading a little bit wider apart. Everything looks good down below. The signal was right here. So we kind of just have to bear some patience, guys. And that's the whole key to trading long term, like the higher time frames, like the daily charts. You've got to have the patience to wait things out. And you can see the next day price went right down. Okay. And then the next day after that, holding on to the trade, price did actually reach our first take profit right here at 169.24. I want to go back for a second. We did have the stop loss, which you place immediately when you take the trade. So whenever you take the trade, you right away put in your stop loss, 1.7113. So that was in place. And when our price does reach our first take profit, then you move the stop from here, in this case 171.13, all the way down to just below your original entry. This original entry now becomes the break even level. Again, this so you would move your stop a little bit past 1.6972, and if price goes against you, you're stopped out. However, remember, we're taking two positions where every trade we're opening up with two positions. The first position is always has the first take profit level automatically placed, so you don't have to look at your computer. The first position was stopped out right here and really good pips, okay? And then the second position is open. It does not have a take profit level. It does, you leave it open in case price continues going down, okay? And so the second position, you're in money, but then the second position it closes right here, and you can see all the extra pips you would have made. Now then, by keeping it open the next day, price went down a bit. It became a bit of a reversal doji right over here, okay? And I would have thought price would have continued, because often when you see this pattern, price does continue going down. But the next day was price went against us, and since our stop loss was moved from here to here, we move our stop loss for the second position, guys. So right here, you would have been stopped out, and still with some further profits, maybe as much as 10 or 15 pips, depending on where you moved your stop loss. Okay, so that's this is what the winning trade looks like. And the big lesson here is, let me just take this off. Stick to the plan, guys. We have a plan in place, exactly what we know what we need to do, especially when price hits the first take profit level. And the key here on this first trade, and the lesson you should write down in your notebook, is patient wins, stick to the plan. Okay, so let's get looking at our second chart here. Again, this was held over from October 28th to last week, and this is what happened, guys. Let me just erase that. So this was a buy Swiss franc Japanese yen trade, okay, and we got in at our entry 124.74, okay, so we got in right here, okay. And this was the next day as price was going up. So when this candle closed at 5 p.m. Eastern Standard Time, price was already moving up pretty high, and we got in there anyways when I sent out the signal. So you can see the next day price really shot up this was a huge monster momentum move, guys, and reaching our resistance area, and sometimes price goes through and sometimes price rejects, but price went all the way up. And the good thing about that is not only did it hit our first take profit target of 125.09, it did hit our second take profit target of 125.45. So your first position was closed at the end of this candle. When you open up your computer, you saw this big white candle, and the first thing you did is you moved your stop loss all the way higher to to just above your original entry, which is now the break-even level. So your original entry is 124.74. So you move your stop loss from here to just right there, okay, just above here. And then your second, so that would have been closed out. Your second position would have kept running right here. And you had the choice, guys. It's always your choice when you want to close a trade. Your second position would have closed up really high up here. So this would have been a really good winner for you. And then price went down the next day after you'd moved your stop loss, so you would have been stopped out. But again, you're stopped out with some profits, extra profits on the second position. So guys, all in all, this was a winning trade. Congrats if you took this trade, and just want to go over the lesson with you. Okay, the lesson here is at our entry. Okay, this was the signal right here, guys, telling you to get into a long trade here. That means bullish trade, and you need to recognize some of the important candles. In this case, guys, you can see this candle here is a strong momentum candle. So that's the lesson. That's what you should write down, or you should have written down in your trading journal. By the way, trading journal you keep beside you on your desk, okay? And you just hand write down the things that you need to write down to help force you to make changes and become a better trader by sticking to the good trading habits. Okay, so again, the lesson here is recognize the good candle strength here, and getting in would have given you the confidence that price still would have gone higher. Okay, so that's the lesson there. Okay, this is the first trade signal of last week that I sent out by email. It was a sell British pound USD, guys, and take a look here. We had a signal right here, and we did get in right here at the bottom of this candle. That's when I sent you the signal on November 1st. So in the signal again, I give you the stop loss, in this case 1.3772, which you place right away whenever you're taking a trade. And then if you're opening the trade with two positions, your first position, you always have the first take profit level, in this case 1.3614, but the second position you leave open and you do not put in the first take profit level or the second take profit level. Okay, so this is what happened. We got in right there, guys, and on the next day you can see price went down from here all the way down to here. Okay, so right away we hit our first take profit level of 136.14, guys, and that trade was closed out automatically because you put it on, you place the take profit level on through the MT4 platform when you're taking the trade. Okay, now second position is open. Okay, hoping that price would come down even further. But once price comes down and hits our first take profit level, you now move your stop loss down lower to just below, maybe 10 pips below or more your original entry. In this case, it was 1.3660. Okay, in case price comes back, and you can see the next day price actually reversed, went and hit our stop loss, which we had already moved. And so our second position is now automatically closed. But again, because we were maybe 10 pips below the original entry, you actually made an extra 10 pips on top of what you made with your first position. So there is no way to prevent this kind of thing, guys. And according to our rules, we do move our stop loss down to here. Now, here's the things. You may say, well, why do we move our stop loss down below our original entry? Because now we're in a free trade, so no matter what happens afterwards, we can't lose any more money. If we were to move our stop loss not past our original entry, but let's say right here, just above this moving average line, okay? If we were to move our stop loss, yes, price did go up. It would not have hit our stop loss, but what if this candle right here would have gone higher and closed right about there? So here's the danger. By moving our stop loss a little bit higher, okay, and not down past our original entry, we can't predict what's going to happen. So this candle would have stopped us out right here. This is the extra loss that we would have taken, and instead we minimized our loss by having our stop loss just below the entry. So you see, we actually made some pips and we minimized our loss, minimized our risk by moving our stop loss a little bit lower. And this is called kind of a trailing stop, what the other gurus want you to do. Well, this candle might have stopped us out at a much bigger loss. Okay, so that's kind of the reason why I implemented these rules. It works mostly in our favor, and we can never be in a losing position once price reaches our first take profit target. So again, congrats for winning this trade, guys. Okay, next trade, guys, and let's take a look. This was the next free trade signal I sent out last week, or this most recent week, guys. And it was sell Euro USD on November 2nd. And let's take a look. I sent you out this email with the different levels, the entry level at 115.78, the stop loss, the first and take profit levels, right? You can see that I've graphically displayed it on a chart. So right here, guys, at the at the end or the close of this candle, definitely thinking price was going to go much lower with the trade setup and what I saw here. And this is a momentum candle. It's in the same direction as our trade signal. So I thought we're going to go lower. Our entry was here, our stop loss here, our first take profit was here. But you can see what happened, guys, on the next day. Okay, price reversed higher, so it went down lower. Okay, and then went here and closed right there. Now, this was as a result of the important news, economic news for the USD, and the news was the FOMC. It's one of the most important news events that can occur that does affect the outcome of the USD and its price level. In this case, price went against the USD, even though the news wasn't that bad or anything like that. But that's the problem. When you follow the news, anything can happen. And I thought the news that would come out would actually favor the U.S., making this trade come down even lower and then hitting at least our first take profit level. So I made the huge mistake of basically not following my own rules, but listening to the news and having the news dictate the outcome. So with the FOMC news event and gaining strength for the euro, I thought then at that point in time, well, the U.S. is just going to weaken again and the euro is going to continue strengthening, forcing this trade higher. So what I did is I just wanted to minimize the reversal, and I just asked you, and I sent out a special email asking you to close this trade. I mean, better safe than sorry, right? And there's nothing wrong with that, guys. But in hindsight, let's take a look. The next day, price went down completely opposite. So you can see the randomness of the market, especially before news. Down, up, down, up, down again. And if we would not have closed the trade, because there was no reason to, price still did not go above the DTL line. This is the dominant trend line. So one of the rules is price crosses the DTL line, then we automatically close the trade. In this case, it didn't. We should have kept it open, and that's my fault. So price the next day went down all the way down to here. You see, that was the low of the day and closed right there. And we definitely would have, perhaps not on this day, but the next day went down even further, right down to here, and we would have hit at least our first take profit level, and it would have been a really good trade for a lot of pips, guys. So again, sorry for that, and the lesson is, okay, the lesson is really don't follow fundamental news, especially important news. Now, if there's important news the next day, you don't have to trade. And guys, I did give everyone the warning, just take a small trade anyways, which generally means just take one position or a very small size, maybe micro lot or something like that. So I already warned everyone when I sent the signal to only open up with a very, very small position. And hopefully most of you followed my directions. So this is what happened, okay? And the actual lesson, guys, is don't second guess yourself and don't, stick to the plan. The plan was to keep the trade open, and we didn't. And I guess I decided that the fundamental news was pretty important, weak, and that was going to weaken the USD, and I was wrong. So don't follow the fundamental news, and the lesson again is don't second guess, stick to the process, stick to the plan, okay? So our final trade signal of last week was the buy Euro Japanese Yen, guys. Again, this is what I sent you with all the information. It was on November the 3rd. And let's take a look. Our entry was 132.41 right here, guys. And this is a momentum candle. Now, you take a look here. And the reason I wanted to take a buy trade was take a look at the lower wick, So basically, price is coming down. Okay, price is coming down. but then being rejected off this important moving average and price going up. Again, coming down, but again, some rejection. Again, rejection here, and price closing here. So I thought for sure that this was going to be a pretty good support area, forcing price to go higher. Here's a momentum candle, guys. Okay, and instead you can see what happened. Price went down from our entry the next day all the way down here. But the interesting thing is, and the good thing is, and this is why we have to follow our money management plan, price did close below this DTL line. Okay, that's the DTL line right here. It's the 21 EMA. And once price closes past that, we automatically close our trade. So again, that is limiting our risk, limiting our position. Our original stop loss, take note, was 131.30 right here, okay? But we did not wait for price to come all the way to hit our stop loss. In fact, we closed our trade before hitting our stop loss, so we actually saved some pips there as well, okay? So we minimized the damage, and that's the number one thing to do in trading is minimize the damage, minimize your risk, and always protect your the money in your account. Okay, so let's take a look, guys, at the trading journal, and this is so important. This is what I do exactly. So first of all, forget time-consuming spreadsheets. Now, after a while, the numbers will blind you and become ineffective. Okay, so I know this is what all the other gurus want you to do. They want you to keep these fancy looking spreadsheets and they want you to be inundated with numbers over numbers. And again, if you're a brand new trader, the beginning numbers are not going to be helpful anyways. And besides, even for the experienced traders, come on guys, you know how well you're doing. If you have more losses than wins and how much money you're losing, all you have to do is look at your account balance, right? So you don't need any fancy spreadsheets to keep track of all of this stuff. It's more important to do something else, which I'll explain in a second. So, but and one last thing, if you want a nice spreadsheet and printout of all your statistical trading information along with a nice fancy chart, down below the MT4 platform, down below in the trading history, you can press a couple of buttons, guys, and you can get this beautiful statistical report. It's quite comprehensive with a lot of interesting numbers, and you also get a chart that comes along with it, a graphical chart to show you exactly what's happening with your account. So that's all free. That's below your MT4 charts in trading history. And there's a couple of key things you can click. If you want more information, Google this online, how to print out a history from your MT4 chart or trading platform, right? Maybe in the future, I'll do a lesson on this as well, okay? So here, go old school. Now, this is what I do, okay? Hand write a few key points in a notebook and keep it always beside your computer. This is important. You don't need to turn on your computer, go to a separate software package or spreadsheet or Google Sheets or anything like that. Guys, just have a notebook with the date on top of each page, right? And write down the things that are important to you. Just a few key points, a few words. So words are a lot more important than numbers, okay? Next, make note of your mistakes and what worked in winning trades. Then acknowledge your mental state and how it impacted your trade decision. So if you keep track of this on a daily basis, on a trade that you take, if you are in a winning trade, well, a couple of notes about your mental state. Why did the trade work out? How did you feel? What was your attitude? Were you trading within your risk and so on, right? If a trade didn't work out, then a couple of key things and why you think the trade didn't work out. Did you follow all the rules or did you do something different? Did you change tactics or whatever, right? It's much easier to put this down, and words and feelings will always give you more information and be more impactful than a bunch of numbers on a spreadsheet. Okay, so next, write down the rules and follow them. How many of you have written down the rules? Now, the rules have been given in previous videos, but from time to time when we review different trades from week to week, I do talk about different rules in place, and you guys need to write down every week anything pertinent or anything new that you haven't heard from before. And again, one of that is the rules. So most traders fail when they forget about the rules, or they change the rules, or they change their strategies. And it's important to keep and follow the process. Keep following the rules, guys, and you should have this written down somewhere. Next, and finally, and there's probably more information, but copy each trade with a screen capture image. Now, this is super important. I do this all the time. So whenever I take a trade or I close a trade, I take a screen capture image. And then you can keep that in some sort of file on your computer in some sort of order. And maybe in the future, I'll have another lesson on how to keep this on track, so you can always go back and take a look at your trades, right? But you can make simple notes on each image, and I'm going to give you a couple of screen capture software programs that are free, so you're able to annotate them, add arrows, and even put some text on it to help you remind what happened on the trade, okay? And this is super important. Guys, words and pictures through screen captures are much more important and more valuable than all the numbers and that you can have on this huge, gigantic spreadsheet. And I'm telling you guys, after a while, there's going to be so many numbers and so many statistics that they are either going to blind you or you're not going to bother with it, with the process anymore. So it's much easier to do it this way. Go old school and have a notebook beside your computer at all times. Make sure that your trades are dated and you have a screen capture with it. Okay, so remember, pictures are worth 1,000 words. Okay, now, just in summary again, you can read this again here. These are the trades from last week. This is the information and again, just a couple of key words. It doesn't have to be long drawn paragraphs or a novel for each trade. You don't have to go into detail. Again, as an example, October 27th, we reviewed the British CAD trade here. It was a winner. And the notes that, as an example, you could say stick to the plan, patience wins, and you can see this. This is just a summary of everything I've talked about and what you should be writing down in your trading journal notebook, which sits beside your computer. So if you want to look at that, go ahead, guys. And this is what screen captures look like. Here are two free programs. They're excellent, but the first one is TechSmith. The company is called TechSmith, and they have different screen captures and programs on their website. A lot of it you have to pay for, but look for the free screen capture version, the free one, okay? This is not quite as good as this one. I recently came upon this one. It's called ScreenRec.com. This is excellent, guys. It allows you to do everything and also gives you a library. So it saves it in the cloud, gives you, I believe, 2 gigabytes of saving all your screen captures and everything else on the cloud there. So you don't even have to save it on your own computer, right? So it's called ScreenRec.com, and if you want the 2 gigs of extra, like a library that they'll save for you, then you have to fill out a little form, but it is absolutely free, and they're both easy to do, right? So I would probably recommend the ScreenRec.com. In the past, we used an excellent program called Jing. Jing was probably the easiest screen capture program available anywhere on this planet, but they've discontinued. It was actually run by I believe it was run by Jing. It was a completely different company, but they no longer have that available. Now, ScreenRec.com gives you, take a look right over here, guys. They give you a kind of a menu tab which floats on your screen and usually attaches to your screen on the right side, or you can grab it right here. See the pen? You can grab it and put it up to the top of your screen to the left of your screen. It's always on the surface. So no matter what you're looking at on your computer screen, that you'll always see this, okay? And then you would just click this. Here's the camera button, and actually you can even do short recordings on it as well, and then annotate them as well. Here is the library, this little icon. You can click on that and you see all the screen captures you have taken. So this is very handy. And then here's some settings as well, right? And when you take a screen capture, you can save it on your you can actually use this right away in an email, or you can save it somewhere else on your computer. So on the website, it's very good. Read it all over. It's very simple to use, and I think you'll love it. Okay, so that is basically it, guys. We're almost finished. And if you want my free signals, again, there's no credit card, no obligation. You can quit at any time. I don't care. You know, I've been giving out the free signals for about a year with an amazing winning record. It was close to 80%. Now it's just dropped down a bit, okay, but still very high winning percent, and guaranteed, guys, you are going to make money. I don't know why any of you would go anywhere online or with another trading guru who claims this and promises you that, and on top of that you have to pay for. I mean, there's almost nothing online in the Forex world that is absolutely free, guys. And I'm telling you also right now, another huge bonus is that we trade on the daily charts. You only have to look at your computer once or twice in a day. We're not trading intraday, during the daytime, or scalping like these other online gurus or trade signal services. They usually are trading on the smaller time frames, which means you're forced to keep looking at your computer screen and forced to waste a lot of time, especially for in this world. We're all busy, guys. We all have things to do. Why spend the extra time on a computer when you don't have to? Okay, so my service is unbelievable. I'll put you on my VIP list, guys. All you have to do is send me your request to receive my free signals with your email, okay? And you can send it to mskyj007@gmail.com. Again, right here, mskyj007@gmail.com, and you'll get my next free signals. Okay, so that is pretty well it here. This is me again. Summer's coming to a close where I live. It's a place called Wasaga Beach, and again, cheers from Canada. Subscribe down below. Okay, hit the subscribe button. Make sure you hit the bell so you get all the new YouTube videos in your inbox. And again, if you like what you saw in this video, guys, I really appreciate this. Hit the like button, okay? And it tells me that I'm doing a good job, and more good things are to come. So you can also send me a comment anytime, okay? So cheers from Canada. This is me signing off. Take care, and we'll see you in the next video. Bye for now.